The following is a project of our nonprofit newsroom. Support Midcoast Morning and local community-centered journalism today by signing up to be a monthly sustaining donor at chly.ca/donate. It doesn't take much money to support local news.
Hello and welcome to Midcoast Morning. I'm Joe Pugh. The largest Vancouver Island-based financial services organization is planning to merge with a credit union on the mainland. Coastal Community Credit Union and BlueShore Financial have announced that they've signed a memorandum of understanding to explore a merger to form a combined credit union serving British Columbia's West Coast and Vancouver Island communities. Coastal Community Credit Union is the largest credit union based on Vancouver Island, with close to 85,000 members and over $3 billion in assets. For more information, I spoke with Coastal Community's board chair, Dominic Rowlands. Can you tell me, why is Coastal Community Credit Union considering this merger?
So we have a lot of capital kinds of expenses that we're going to be making, having to invest in things like open banking, payment modernization. There's significantly increased regulatory burden where we have to do a lot more reporting. That kind of thing becomes more difficult. A lot of organizations have sort of done studies of credit unions and said they need to be bigger scale to achieve what they need to achieve. So we've been looking around at possible ways to achieve greater scale so that we can better serve Vancouver Island residents. And this opportunity came along, and it seemed like the best way to achieve the kind of scale we need in order to remain competitive and to remain able to provide the services that our members need and the support our communities deserve.
Can you dive into a little more detail for me on some of those reasons for a need for increased scale? You mentioned open banking and a couple of others.
Yeah, so open banking has been mandated by the federal government. It's something that allows members to sort of link up all of their bank accounts, all of their financial relationships into one kind of app. So it means that app is going to be able to dig into the information that Coastal holds. Now, members will have to agree to that, but we have an obligation to set it up so that it can work. And so the app would be able to dig into your financial circumstances, your accounts, whatever, on Coastal's site. But, if you have Royal Bank accounts, then it would dig into those as well. If you have some insurance relationship, it could dig into that as well. So, and then all these entities can then compete with each other for services that you might be interested in having. So that the risks there in terms of privacy and compromise of data are major. And so it is an expensive process that we would be undertaking in order to meet the requirements that we have from the federal government for open banking.
Why has BlueShore in particular been signaled out as a good fit for this merger?
Yeah, so there's a few ways that we could approach getting to be a larger credit union. One is to approach a roughly equal credit union and say, we'd be interested in merging. And another is to approach smaller credit unions and sort of try and acquire them in some way. And the third is to be approached by a much bigger credit union and be acquired by it. And so looking at those three options, the acquiring of a small credit union really doesn't fix the problem in terms of scale. Merging with BlueShore makes us actually the third largest provincially regulated credit union in British Columbia, which gets us to scale fairly quickly. It's a merger of roughly equals. We have a strong membership base on Vancouver Island that would continue to have a Vancouver Island focused credit union. I mean, not that it wouldn't also be focused on the North Shore and Sea to Sky, but it would retain a very strong focus on Vancouver Island. And this was the way we thought we could achieve that.
Diving into that, Coastal Community has around 50,000 more members than BlueShore, but BlueShore has around $3 billion more assets than Coastal Community. How do those two factors play into what a merger would look like?
Yeah. So there's one other factor that you haven't mentioned that needs to be raised, and that is capital. The retained earnings of Coastal Community Credit Union are slightly more than the retained earnings of BlueShore. So from the perspective of retained earnings or capital, what you bring to the merger, we're roughly equal. So we have more members, they have more assets, and we have roughly the same amount of capital. So it really is a merger of equals.
Is there any consideration of merging with a group on the mainland for an island-based credit union, of maybe a focus being shifted?
The merger that we're proposing here, I would submit, actually allows us to retain our focus on Vancouver Island. The way the merger is going to work, there are some differences between the two credit unions. The brands are going to remain; both brands will remain. And what will happen is the things that make us as meaningful to the residents of Vancouver Island will continue, and the things that make BlueShore as meaningful to their members on the North Shore and Sea to Sky Highway area will be retained. So there's not going to be a loss of the focus. Both credit unions are committed to working with their communities and community development. So in that way, it's a good fit. And it's also good in that, the things that make us loved by Vancouver Island residents are all going to stay. And the way this is set up, that's pretty much assured.
Would there be any impact on jobs with consolidation between the two credit unions?
Yeah, so that's one of the really nice things about this particular merger. And that is that we have no branches in common, no geographic area in common. So no branches are going to close. And no employees will be laid off. I will make this commitment. Any employee of BlueShore or Coastal Community that wants to continue working for the new entity will have a job. So there's not going to be any job loss here. I will briefly talk about a time that I was on the credit union board of Island Savings. So Island Savings merged with First West back in 2014. And I was on the board at the time. The board was debating the motion to merge. I said that the only way I was prepared to support it, I told this to the chair of our board at the time. I said the only way I'm prepared to support this is if you can get a guarantee that there will be no branches closed that are not losing money. I couldn't get that assurance, so I refused to support that merger. And after the merger vote passed, the next day, I resigned from the board. So, my commitment is that people will not be losing jobs as a result of this merger.
What will the maybe day-to-day difference for members of the credit union be after the merger?
They will have potentially more services that will be available because we'll have the capital to be able to invest in additional services or products. Other than that, the feel is going to be the same. You go into your branch, whether it's on Lonsdale from BlueShore or it's on 4th Street in Courtenay, you're going to go into your branch. I guess I should make a slight change there on the 4th Street in Courtenay because we're doing a reno there. So it'll be a nicer space. But the members are going to experience what they've experienced all along with potentially some improvements.
With consolidation being maybe fair to say an industry-wide trend, what is maybe the difference in 2024 between a credit union and a conventional bank, and has it changed?
Actually, it hasn't changed. The difference remains the same. The bank is run by a board of directors, sort of like a credit union. Technically, if you own shares in the Bank of Nova Scotia, you get to vote on the board of directors, but it doesn't really work that way. The way it actually works is the board of directors has a nominating committee, and that nominating committee then puts forward the names of the people it wants on the board. No other names are on the board or on the election on the ballot, and you get to vote yes or no for them. And if you vote no, well, the only way they don't get elected is if everybody votes no. So if one person votes yes, they're on the board. With our elections, we have elections every year for board members. We do a call for nominations. We have, and this is a process we followed just this past year. We have a call for nominations. We get candidates who submit their applications. We do have a nominating committee, like the bank. We interview the candidates, and then we recommend typically more candidates than there are positions. And our recommendations are based on what we believe would be in the best interests of the credit union. But ultimately, the members decide, and they elect who their board is. If you own half of the shares of the Bank of Nova Scotia, you control the Bank of Nova Scotia. If you own half of the shares, well, you can't own half the shares of a credit union. But one member, one vote, as opposed to one share, one vote. So it's a very different democratic process, and it really is a democratic process. Members get to decide who's on the board, and we've had incumbents who've run for election and lost. We've had incumbents who've run for re-election and not been recommended by the nominating committee, and had new people recommended by the nominating committee. It's a very different process. It's much more democratic. And on the other side is, when the Bank of Nova Scotia makes a whole bunch of money, it goes potentially in dividends to the shareholders. It doesn't go to the people who are actually using the services of the bank. And in the case of the credit union, the money stays in the credit union. It stays on the island. It'll stay in our trade area. If the merger happens, the money stays. It helps develop the economies of the island. What they decide in Toronto for the Bank of Nova Scotia, if it affects the island, well, maybe they don't care, maybe they do, I don't know. But we care about what happens with the credit union on Vancouver Island. We care that we develop the communities, we develop the economy, help develop the economy of the island. So it's different in the sense that it's local, it's compassionate, it cares about the people on Vancouver Island. And we care about the people on the North Shore and the Sea to Sky area.
What are the next steps and maybe the timeline on this?
So we're in the process called due diligence. Just because it looks like, you could take a look at last year's financial statements and say, well, on paper, it looks like this might be viable. But then there's a whole bunch of detail you kind of have to dig into. So you spend some time looking into the details of the other credit union to make sure that there isn't anything there that is going to be a surprise. It's a bit like getting a home inspection done if you're thinking of buying a home. You don't want to buy the home without knowing that, the plumbing is sound, the electrical system isn't going to set the house on fire. So you need to make sure that the decision you're making is a sound decision by taking a very close look at the operations, the balance sheets, the decisions that have been made by that other credit union to make sure that there aren't going to be problems with the merger going forward. So we're in that process now. That process may lead us to conclusions about the best form of merger, and there being two different ways to merge, one being an asset transfer and the other one being an amalgamation where effectively both credit unions transfer their assets to a newly created third entity. So we have to decide on that. Once that issue is decided, then and due diligence is finished, then we have to set up for the voting process, which would be perhaps summer, early fall, depending on how quickly we can arrange to get the materials out to people. But the process also requires the BC Financial Services Authority to approve the merger and the Competition Bureau to approve the merger. So there are some regulatory approvals that are required, and they will take a bit of time. So if all that happens, optimistic timeline, this merger could take place sometime late this year.
And you mentioned earlier on that the plan as it stands now is for both credit unions to kind of maintain their name and branding?
Yes, that's correct. The idea is that this is, we're not trying to create one homogenous credit union. We're trying to create a new structure that allows the credit unions to continue to operate as they have been, but gives us the scale to allow us to do new things.
You mentioned earlier on the whole idea of the credit union is that the money within the credit union, maybe the equivalent of dividends, are reinvested in the community. Is there any kind of balance or structural framework in terms of how much of that goes to coastal communities region versus BlueShores?
Well, I'd have to say that hasn't been a topic of discussion at this point. I do know that both credit unions have a track record of providing donations to community organizations, and they have a track record of investing back in the community. I don't think any thought is being put to, is there a formula for deciding how much goes where? We have, even on Vancouver Island, we have a wide range of communities. We don't have a formula that says, 30% goes to Nanaimo and 20% goes to Victoria or anything like that. We don't do that. What we do is we look at where the needs are and we make sure we address community needs.
Is there anything else you think it's important for people to know about this proposed merger?
Well, I would actually submit that this is our best chance to make sure that we maintain a credit union on Vancouver Island that is committed to the interests and the development of the communities on Vancouver Island.
Dominic Rowlands is chair of the board of Coastal Community Credit Union.
Midcoast Morning is made possible by the Community Radio Fund of Canada's Radio Meters program and listeners like you. Support Midcoast Morning and CHLY's nonprofit newsroom today by becoming a sustaining donor at chly.ca/donate. Local news can't survive without your support. Another way to help us out is to share this show with your friends and tell them why they should support us. Finally, if you're listening to the podcast edition of Midcoast Morning, go and give us a positive review on Apple Podcasts or whatever podcast feed you use. It helps people find us.
Today on the show, we're exploring the proposed merger between Vancouver Island-based Coastal Community Credit Union and BlueShore Financial. Ross Gentleman has been involved in the credit union world since the 1970s. He's spent time on the board of credit unions, managed a credit union, and worked for the province in the area of credit union regulation.
I've had several decades now of experience in the credit union sector. I got seduced by going to an annual general meeting of a small credit union in 1977, and more or less accidentally was elected to the board of the credit union at that time. And since then, I served on the board of that credit union. I ended up serving on the board of the Central Credit Union, the Provincial Central, and then I worked for 17 years in credit union regulation. And then later in life, I got convinced by a couple of friends to come back and manage a small credit union for 5 years. So I've been in and around the credit union system since 1977 in various capacities.
And how has the credit union system changed since 1977?
It's changed dramatically. Many of the small credit unions have disappeared. They've been absorbed in a continuous stream of consolidation, and I think there was close to 300 in the mid-70s, and now there's, I believe, something like 39 left in the province. So this the sector has lost some of its local representation. The smaller institutions that would formulate a classic credit union idea, and we have the the larger credit unions really dominating the sector.
What are the consequences of that concentration, both in terms of what the consolidation allows credit unions to do that they couldn't otherwise do, and maybe what gets lost without the smaller ones?
Well, I'd say there's, on the positive side, I'll start there for the moment. On the positive side, the larger credit unions tend to be able to provide a broader array of services and can compete in the larger financial services marketplace as a consequence. And so they're moving, I'll use the term upscale, as a consequence of their scale of operations. What's lost is the local independence, the local control, and I'd say as well a loss of democratic accountability, because when you get into the larger institutions, the concentration of power really evolves into the hands of the management team, and the elected officials really are hard-pressed to keep pace with what management is pushing for, and the elected officials themselves are not likely going to be challenged in a democratic fashion, because the membership is so diverse and it's very difficult to organize within a large and diverse membership.
How does that change play? What's the difference for you between, say, if a credit union has 10,000 members and 100,000, each member would still have one vote, right? So why does that democratic process, in your view, change?
Well, let me play it out two ways. One is on a sociological side, and one is on an organizational side. On the sociological side, we don't have the bond of membership within large institutions that we have in smaller institutions. Smaller institutions may have been fashioned to serve an immigrant community and the diaspora of that immigrant community, or the smaller credit union might be organized around an affiliation like a workplace. And as a consequence, people had a sense of ownership that was based in their identity, either as part of their a language group or a church group or a strong industry sector. For example, the Teamsters used to have a union, and Scott Paper used to have a credit union, and many of the important elements of that sense of identity within the community drove the democratic process. When you get to larger institutions, the identity, people's identity with the credit union no longer parallels their identity with a language group or a religious grouping. So the only affiliation that people have with the credit union at a scale is the membership of the credit union itself. No secondary or tertiary identities that were relevant. On the institutional front, there's a classic dilemma there, or struggle between management and board. And I think as a consequence of the size of the institutions and the complexity of the institutions evolving, management starts to see an opportunity to exert greater control and have greater influence within the operations. And that serves also to erode the democratic accountability mechanisms, because management really does have significant advantages as the credit unions grow large.
And advantages to what end? Why, in your view, is that a concern worth flagging? Wouldn't the goals of management and the goals of the members be more or less aligned? Well,
you're stumbling into a classic economic argument, which is called the owner-agent problem. And the owner-agent problem asserts that once you hire management, it's very difficult for management's interests and the owner's interests to be perfectly aligned. So what you have is a group of people at the senior management level who have ambitions, careerist ambitions, personal rewards ambitions, that are not necessarily parallel with the interests of the owners, in this case, credit union shareholders. And it's a classic dilemma within any business enterprise. But in this case, the owners, and I'll use the term owners rather than members for the moment, the owners are unlikely to mount as serious a challenge to offset management's interests, because cooperative models tend to have broadly dispersed memberships, each with a modest stake in the game, and so their likelihood of really contending with management is less than it might be if someone held a 20% or a 30% ownership interest in a business. In this case, most people in the larger institutions have an interest in the operations that's below 1%.
And the reason we're talking is because Coastal Community Credit Union, a credit union on Vancouver Island, has entered a memorandum of understanding with BlueShore Financial, a credit union on the mainland, to have a merger. The plan is at the moment, for the branding to remain the same, and no one's going to lose their jobs is the plan. What do you think members of the credit unions involved need to be aware of, or what do you think they should keep in mind about this proposed merger?
Well, I think the first thing is that they're each individual member's voice in the democratic governance or realm of the credit union will be lessened through a merger. It's just a matter of a further dispersion of the membership. So any sense that local needs or local projects that need support will get attention is going to be reduced. And that's just the nature of consolidation at this kind of level. Coastal Community has already been created through a variety of mergers and acquisitions over time. So it's not something different from what has happened in the past, but over time, what's going to happen is that among the members of the credit union, fewer and fewer will be actually participating in the decision making. The board will probably be reduced to a lesser number than the current number of both boards, and so you start having fewer people who may represent Nanaimo or any other part of Vancouver Island being actually representing those constituencies on the board of the larger credit union. That's one of the offsetting trade-offs, sir.
And on the other end of the trade-offs, this merger is being proposed. It's suggested that this is the best way for the credit unions to be able to offer a full suite of services, and also to be able to smoothly cover the costs of regulatory requirements, such as open banking. What do you think people need to know on that end? Well,
I think there's, in the remarks I've shared with you thus far, I haven't really spoken to the larger problem that is identified in microeconomics, that over time consolidation is almost certain to happen in any market. So at this stage, the regulator, in our case, it's called BC Financial Services Authority, has come out and said publicly that they expect consolidation to move apace, and largely based on economic rationales, the kind that we've just been talking about, economics of scale being brought to bear. And there are some serious technological challenges which are certainly better served through scale. But I'm thinking that the economic arguments in the past have not prevailed. It was political arguments that moderated consolidation and political will of memberships of credit unions, which offset the need to consolidate. And at this point, it seems that the social realities of our time don't generate that kind of response politically. And I'm not sure that there's an interest in countering the argument that you'll be able to get a better quality service, which is the basic argument for consolidation.
So if someone were to really simplify this situation, the pros of a merger between credit unions are that you'll be part of something bigger with more assets, able to potentially provide more services. And the trade-off is that because it'll be a credit union with more members covering a broader geographical area, it will be more difficult for your specific local initiative to maybe get attention within the forces that direct the credit union on everyone's behalf.
That's certainly number one. There's a number two there that I put it that in the event that the large credit union chooses to go in a certain direction, and the board might choose to pursue further consolidation or whatever they choose to see as a desirable course, less and less likely is there going to be a chance for the members to try and moderate or redirect those initiatives, because the governance structures are set up by regulation and legislation. The governance structures now do not really facilitate member initiatives or member challenges or dissent, the expression of dissent in any significant way, so that there's not the democratic corrections that could be obvious. For example, if you tried to parallel what goes on in municipal politics or school board politics, you'd get local initiatives by people who say, no, I think we should be doing something else. But in the context of credit unions, those democratic opportunities have been pretty well muted over time, so that it's difficult for a group of members to organize and protest or otherwise mount a different set of candidates for the board or whatever you might choose to do.
Is there anything else you think it's important to bring to this conversation today?
I think what I do see here is a larger movement towards consolidation, and it's going to proceed at some pace because I don't see the opportunity really there for people to resist at this stage very easily. It would take an exceptional effort on the part of some members. But we will see a difficult choice being made at some stage in the not too distant future as to whether we're going to have 6 or 8 credit unions in the province. And at that point, that the concentration within the credit union sector is going to pose a problem to the provincial government. And they're going to have to make a decision as to whether or not the deposit insurance scheme is adequately structured to have these large entities present as separate operations. And there may even be, in my opinion, a desire on the part of government to fold credit unions into something like the Alberta Treasury branches in Alberta. and make them a crown corporation, make full credit unions into a crown corporation. It would be an interesting twist.
Is a way to think of this like credit unions have maybe turned from George Bailey's building and loan in It's a Wonderful Life to kind of the equivalent of 5 or 6 of our big banks, but they're nonprofit banks?
You're absolutely correct. The classic idea of a savings and loan, or a classic idea of a credit union that was really providing some important services to a constituency of note, that model has largely disappeared, and now what we have is near banks, and increasingly that's going to dominate the scene, and is already dominating the scene.
Do we lose anything with that?
Oh, yeah. And I think perhaps a decade or 2 decades out, there'll be another iteration of innovation and disruption at the local level. Credit unions were the disruptors 50 years ago, 60 years ago. And now we go through this period of consolidation, and the vacuums that they leave behind, we're probably seeing them currently in payday lending and the resurgence of finance companies, private finance companies. At some point in the future, something akin to credit unions may re-establish themselves, but at the moment it seems like we're on the downslope.
Ross Gentleman has been involved in the world of credit unions since 1977, both as a credit union manager and working for the province in the area of credit union regulation. That's our show for the day. Thank you for joining me. I'm Joe Pugh, host and producer of Midcoast Morning. Jesse Woodward is our executive producer, and Arby Frew is our technical advisor. You can sign up for CHLY's newsletter at chly.ca/subscribe for updates from our nonprofit newsroom and more. Our theme song is First One by local Nanaimo band Waste Management. If you have a story you'd like us to cover, email us at news@chly.ca. That's all for now. I'll talk to you on another Midcoast Morning.
Midcoast Morning would not be possible without the funding of the Community Radio Fund of Canada's Radio Meters program and listeners like you. Midcoast Morning is a project of CHLY's nonprofit newsroom. Support nonprofit journalism in Nanaimo and on the Salish Sea today by becoming a monthly sustaining donor at $5 or more per month. Support the program at chly.ca/donate. If you're already a supporter, record a voice memo telling others where you're listening from and why they too should support our work. After you're done, you can email it to us. Also, share the podcast with your friends. While Meta is blocking Canadian users from sharing news content on their Facebook feeds, you can still share our podcast directly with your friends via Facebook or Instagram Messenger. Finally, this program acknowledges and gives thanks to the Snuneymuxw First Nation as we broadcast and podcast from their traditional territory. Thanks for listening.